You are most welcome, management, and on my own behalf, urging you to be free and present what you've prepared for us. Thank you. Over to you.
Thank you very much, management. Here with me, Novahio Agapantingo, and this is our team. We have here Nchindi Kandahire, Aubrey Mwantesi, and Julius Piri. We're going to take you through the financial analysis of Telecom Networks Malawi TNM for 2021 annual report. The presentation structure is going to be comprising of the introduction, critical analysis, recommendations, and conclusions. Firstly, TNM is part of an industry that comprises of Airtel, Malawi, and TNM in the telecommunication industry, which is comprised with MACRA as the regulator. Some of the services of TNM is that it provides voice, mobile money, and data services. TNM comprises of different shareholders, even though it's a Malawian-owned company, which are Press Corporation Limited, that carries the most percentages of shareholdings, such as 44%, Old Mutual, which carries 24% of its shares, Nigo Life Corp Company, which carries 8%, and the rest of the percentage of shares, which is 24%, is owned by other shareholders. Some of the strategic key issues that we have from this report are the substantial investments such as the infrastructure investments and new technology adoptions such as 4G networks. The financial analysis in this report is coming from different types of tools of the analysis, which is horizontal analysis, which reviews financial statements across periods to identify trends. The vertical analysis examines financial statements, expressing each item as a percentage of significant total. Finally, we'll look at the ratios, which looks at the relationship between two parameters. Firstly, the first critical analysis is the horizontal analysis. So here we see that TNM has experienced asset growth, which is likely to be adapted from new technology that it has incorporated in their organization. Secondly, we see that there is a revenue decrease in 2020. From seeing from the financial annual report, we note that you have indicated that this decrease is due to COVID-19. However, we have noticed that Airtel Malawi also had the same situations, but however, their revenue increased in that period. So for us, we have seen that this might be due to heavy capital expenditure in terms of buying the new assets and other capital expenses. Lastly, we have noted that TNM improved in expense control in 2020 to 2021. We have seen this because of the operation expenses have reduced from -15 to -18. So this is why we suggest that there was a high level of expense control in these 2 years. My colleague will take you through the next critical analysis.
Thank you, my colleague Nova. For me, I will continue with the vertical analysis. On the vertical analysis, we are basing much on the balance sheet, whereby we are actually looking too much into the total liabilities and the equity. This will actually give us the difference easier when we are actually comparing the two balance sheets within the same area, despite the size of the company. Now, if you can look into what we are having there, we are actually looking into the trends whereby our equity and liabilities have been performed within these years from 2018 to 2021. having our 2017 as our base. On the retained earnings, we can see that from 2018, it has been declining to 33%. This is due to the debt financing, actually mainly on the long, short-term loans and the overdrafts. Now, this one, we were actually looking into that one as somehow unhealthy to the company. Why? Because the company is using too much of its debts for sustaining its payments. And also, we are also looking at the long-term interest-bearing loans. On this one, we can see that there is some sort of 18% in 2018, but there was a decline of 6% in 2019, and again, you can see that there is also increase in 2020, and a slight drop in 2021. Now, according to how we actually checked, in this 2019, the drop comes in because of the change which were there in terms of financial structure report. Why? Because the company was actually changing from the group reporting to a company reporting. So the rise of 2020, this brings the true picture of your company, which means now only this 2018, 2020 and 2021, the long term was actually having higher. This was actually bringing a big borrowing rate, while only 2019, this one was actually bringing the low borrowing rate, which means now, as a company, we are saying we need to reduce our long-term portion. Another area is bank overdraft, whereby we've seen that the company has fluctuated from 2018 to 2021, having a percentage ranging from 1% to 8%. This one actually shows that the company is depending much on the overdraft when actually paying on the short loans and other payables. Lastly, it's on the trade and other payables. We've seen that on the trade and other payables, there is an increase from 12% in 2019 to 27% in 2020. Mainly this one has brought in the delayed payments to the suppliers, possibly to maintain liquidity. This stage again, as a company, it's not healthy because most of the workers and other payables are delayed due to some processes of the company to have the facility of taking other payables from other suppliers. Thank you. Let me now hand over to my friend who also continues with other areas. Thank you.
So much, Julius. We'll take you through the 4 financial measures, and we'll be looking at the profitability, financial status, efficiency, as well as the investment ratios. While we are doing our analysis, we'll also be comparing with TNM's competitor, Airtel Malawi. So first of all, we'll look at the profitability, and on this one we'll look at the ROS, which is the return on capital employed. This ratio, as you know, it shows us how the company is using its assets to make profit. When you look at the graph on your left, you will see that the TNM's ROS is actually lagging behind that of Airtel Malawi. It's not that much. The highest, I think, is slightly lower than 40%. This shows us that there is a problem in terms of making the returns. Likely, this is due to the TNM's strategy of focusing on long-term investments, and also suggests that there is likely some weak asset management whereby some of the assets are not really contributing much to make profits. Secondly, we'll look at the financial status, and in this one we'll just focus on the gearing ratio, which will give us the financial risk position of TNM. As you know, normally the gearing ratio of more than 100 shows us that there is a high risk, and a gearing ratio of less than 100 is one that is preferable. If we, after analyzing, you will see that the gearing ratio for TNM is well within 100, which shows that it is doing well. However, if you compare with their colleagues Airtel, you see a big difference, and we note that something is not right. So after analysis of the reports, we see that there is so much of a reliance on debt on the part of TNM instead of equity. And this puts TNM at a very high risk exposure, because the debts will come with interest and other costs. I think that's why the returns on TNM are not matching what is being input. Next, we'll look at efficiency, and on this one we'll focus on the fixed asset turnover. This is the measure that will help us to see how much the assets are contributing to the revenue generation. So we would refer to the higher the fixed asset turnover, the beta. And in this case, if you see in comparison with Airtel, you will notice that TNM's fixed asset turnover is actually good, even though it has been declining since 2017 coming to 2021. So the values themselves, they tell us that the fixed asset turnover is very strong. But this benefit of the high fixed turnover ratio is possibly offset by the high operating costs, since those high assets, they need to be maintained, and so those costs are bringing in a larger amount. That is why it is affecting the revenue. So even though the efficiency is there, but it's not translating into high revenue. Lastly, we'll look at investments, and we'll look at the earnings per share, which shows us how much each share has earned. And if you check on the graph there, you will notice that the earnings for each share of TNM has been declining over the years, if we compare it with that of the competitor Airtel Malawi. And looking at the previous slides where we saw that there is high debt in TNM, it's very likely that these huge debts, servicing these huge debts, is one of the causes that is causing the earnings per share to drop, and also the other reason could be due to the reduced retained profits. So I will ask my colleague to continue with the other two measures. Thank you.